outperforming the Nifty, and the small cap index is also up and about. I reckon at this point in time, there's just a little bit of slackness when it comes to the benchmarks, that is the Sensex and the Nifty. But let's pull up the heat map and take a look at where we are seeing that pull and push as far as the benchmarks concerned. Remember, early in the morning, the breadth was well in favor of advances. In fact, we just had two stocks which are declining. And suddenly we have a change of heart for the benchmarks, and now we have about 20 gainers and 30 losers, as you can see on your screen here. And we do have a little more weakness starting to come in as far as a handful of your IT names are concerned. So Wipro, TCS, HCL Technologies weighing on the benchmarks, along with, of course, Hindustan Unilever, which has lost out quite a bit over the course of the last few, I would say, last couple of hours. On the gaining end, of course, we are looking at strength return to Kotak Bank, that's up around 2.5%. Coal India as well advancing, and a handful of Adani Group companies also supporting the markets at the moment. Not too much to speak for otherwise, but the breadth has certainly changed for the worst. That's as far as the Nifty is concerned. Well, we're going to continue to keep an eye on a whole host of these factors. And as far as the Nifty goes, we're going to continue to keep an eye on the 21,600 mark to see where that goes. But this is as far as your benchmarks go. Hersh, what are you tracking in?
Yeah, absolutely. Let's quickly have a look at some of the stocks which are buzzing in trade. Let me first start off with Fortis Health. There was a search conducted on their premises, due to which the stock is currently languishing around 1.5% down in trade. You're looking at HFCL, which is up roughly 11%. Order win, 620 odd crore new order. You also have RITES buzzing, very similar new order coming through for RITES as well. It's up 16% in trade. So some of those really buzzing on the back of news. NHPC, NHPC is doing well in trade today, 11% higher. Yesterday too, it's done fairly well. Of course, day before yesterday was the OFS, government selling out, and that one's been in the news since. You're seeing the likes of a Rico Auto, transfer of technology to DRDO, and that one is buzzing in trade today as well. If you can have Rico Auto and SIS. SIS is in fact trading higher on the back of that Ayodhya win that's come through for the company. In terms of earnings, you have the likes of an HUL, Kotak, ICICI, all of which will be or is already the newsmaker. HUL down 3.5% on the back of numbers. Kotak Mahindra up 3% and ICICI buzzing, numbers still to come out. Let's look at also an RBL, a Suntech, Tejas Networks. RBL, of course, doing well in trade, but otherwise Suntech muted and Tejas Networks down as we speak. Union Bank and IDBI also came out with numbers. Along with it, if we can have IREDA as well, doing phenomenally well in trade, that one as well. Numbers come out for IREDA as well, so 10% higher. You're looking at a whole hog of railway stocks doing very, very well in trade. Anything from an IRFC, IRCON, Texmaco, Titagarh, all of which are doing excellently well in trade today. Of course, we are in the run-up to the budget, and some of those are the movers on the back of that. Agam.
Right. Well, thanks so much for that, Hersh. Railway stocks particularly are buzzing, and they're going from strength to strength, aren't they? There's no stopping their up move, at least at the moment. And if you're looking to short, well, it will be at your own peril. For now, of course, RVNL is locked in upper circuit of around 10%. IRCTC advancing by as much as 6%. Pull out IRCON. IRCON is the other one which has seen a huge up move. At least as far as some of your bigger movers concerned, there you go. That's about 17% up move there as well. And IRFC is the other one which has in fact doubled in a span of just a week. IRFC is again locked in the upper circuit of around 10%. And just a week ago, it was trending well below the mark of 100. It's at 176 as we speak. So there's no letting up on this one either. Well, that's just as far as the markets go. Let's get in a few experts at the moment. We have Avinash Gorakshakar, Director of Research at Profit Securities, who's joining us on the show. Avinash, good afternoon. Thanks so much for taking the time out. Avinash, and stocks like IRFC, IRCON, IRCTC, all railway-related stocks are seeing an unprecedented move. My question really is, what is driving the stocks so much higher? Is this just euphoria, or Is there some sort of a fundamental catch-up there that's at play as well?
No, I think good afternoon, Agam. I think my guess is very clear that the markets are looking at the forthcoming vote on account, where possibly despite being a vote on account, I think the government would be spelling out very clear-cut policies on the railway infrastructure kind of investment strategy. I think already the railway minister, Mr. Vaishnav, has already clearly hinted that the government is planning a massive infrastructure kind of budget program, and that is driving all these companies. If you look at RVNL, Texmaco Rail, if you look at rights, I think everything connected with railways and railway infra is going up. So I think definitely there's a sense of little euphoria in the current prices. But I think markets are discounting that possibly another 2 lakh crores worth of infrastructure investments in railway would be announced in the vote on account. And once the new government comes in, these could completely be finally certified by the new government. So I think that is what is driving these stock prices quite, in a very sharp manner. My suggestion to investors is that, there's no need to hurry. But yes, considering the fact that there are limited choices available here, obviously, anything connected with railways and obviously with the, sentiment factor largely aided because of the 22nd Jan Ram Mandir opening issue, the markets is definitely looking at some further upside in the near term. I think markets have completely forgotten the HDFC Bank fiasco. And I think it's again back to normal market. So I think clearly railway is now a well-known theme. I would be quite positive on the sector in the longer term. But yes, in the short term, Agam, I think these prices definitely seem to be slightly fair to expensive. And I think only on declines one could definitely generate reasonably risk reward going forward.
Right. Right, Avinash, stay with us. We want to talk about banks as well. And we have had the earnings of Kotak Mahindra Bank, which is, of course, the top gainer on the back of a stable set of earnings coming in. What we really want to know is that how would you go about this one? Avinash, specifically about Kotak Mahindra Bank, the earnings don't seem too bad. But we must also remember that it's not really done too much, at least in terms of returns, compared to maybe about 3.5, 4 years ago. We really haven't seen anything at all from Kotak Mahindra Bank. There's got to be something beyond just the leadership overhang.
I think my guess is, despite the leadership overhang, Agam, I think in terms of the stock outperformance, the last 2 years, you're absolutely right in saying that Kotak Bank has actually not delivered any great return at all. So I think markets are looking at more stronger data points, stronger management commentary, and obviously, in the current scenario, most of the analysts who are looking at banks are looking at the deposit growth kind of trajectory. Any slowdown there, I think, is definitely not a good sign. And I think the kind of dream run which other banks had got in the last 2 years, I think Kotak Bank had completely ignored this rally. So I think if numbers have been better, if the commentary going forward is also going to be positive, I believe the con call will be there very soon for Kotak Bank. Whatever commentary comes out from the new management team and the kind of aggressive growth lined up by them, both on the on the private sector funding as well as typically on fee-based activities, because Kotak Bank has got a large investment banking unit, a broking unit, AMC unit. So I think the markets are quite positive on the fact that all these units are now doing pretty well, and that could obviously collectively produce better numbers in the coming year, that is FY25. So all said and done, the stock looks attractive from a long-term point of view, but mind you, it's a slow mover, so you'll have to exercise a lot of patience before you see a decent risk reward.
Understood, Avinash. And before I come with another question on that count, let me quickly go across to Pragati, who's standing by, to talk about two sets of earnings which have come out, both banking counters, Kotak as well as IDBI. Pragati, talk to us about the key hits and misses in your view, because the Kotak stock has flown away 2.5% higher.
Right, Hersh, you're absolutely right. The reaction that we are seeing on Kotak stock is definitely in response to a stable set of numbers that the lender has reported for the third quarter. Now, the net profit is up 7.6%. While it has largely missed estimates, the asset quality and the net interest margins have posted a relatively better picture as compared to other banks' earnings that we have in front of us. Now, the net interest income or the core income of the bank was up 16%. and other income rose 17.8%. As I mentioned before, the asset quality for the lender stayed flat, so definitely not worsened or improved, with GNPAs just worsening by 1 basis points, which is nothing much to worry about. The net interest margin has stayed flat at 5.22% quarter on quarter. Now that is something that we were waiting for in terms of numbers, because for other banks that we are seeing, the margin compression is something that we have witnessed. Now provisions for the quarter, they have increased threefold to 579 crore rupees. Now that's a big jump, and the bank has clarified that the provisions are up because it has provided for 190 crore rupees against the alternate investment fund and 65 crore rupees against the securities. So that is a basic set of numbers for Kotak Mahindra Bank. Stable numbers, but the interesting bit here is that the media briefing for the bank will start very soon at 3:15 p.m. and the bank has a new MD and CEO in Mr. Ashok Vaswani, and it would be his first address as well. So everyone is looking forward to that. That is my understanding of this entire numbers. And another thing, the management commentary on margins, loan growth, deposit growth, and what trajectory they are planning in terms of growth going ahead will be very important. Second, as you rightly mentioned, IDBI Bank has also come up with its numbers. Again, largely stable, beating analyst estimates once again. The net profit is up 57% year on year. Asset quality for the bank has improved. In fact, gross NPAs are at 4.69%, net NPAs are 0.34%. Even the net interest income is up 17% year on year. So good set of numbers, nothing much to worry about. As we delve deeper into it, we'll bring you the more updates when we can.
Perfect. Thank you so much for that, Pragati. If I can go back to Avinash. Avinash, we've had two major private sector banks. What I believe in terms of their Q3 numbers, but what I believe that they have in common is the fact that the asset quality is something that they pride themselves in. Growth continues to come for both of them, and valuations are at a bit of a differential. So between an HDFC and a Kotak, what would be your preferred pick, or neither? Would it be a third one?
No, I think my sense is that, looking at IDBI Bank numbers, I think this is one bank which has surprised the entire analyst community. And I think, numbers have been very robust. So I would prefer that, unlike looking at, say, a Kotak Bank or maybe a, HDFC Bank. In fact, Kotak has delivered inline numbers, but numbers from IDBI Bank have been strikingly better in terms of both the asset quality, in terms of the loan book growth. So I think, IDBI Bank at these levels looks attractive. My sense is that, some news commentary on the decision to, take in a strategic investor, which has been pending for long, if that commentary comes out very clearly from the management, I think that would be a key re-rating trigger for the stock. So IDBI Bank would be more attractive, from a medium to long-term view. I think there's a lot of steam left in the stock if one were to look at the next, say, 12 to 18 months. So I think this stock looks much better. I would not immediately try to buy into either HDFC Bank or Kotak Bank, because these are going to be largely market performers according to.
Okay, stay with us, Avinash. I want to get in Amardev Singh. He's a head of advisory at Angel One, who's joining us on the show as well. Amar, good afternoon. Thanks for taking the time out. I know that volumes have been thin today because of lack of institutional participation. Still, what are you making of the benchmarks now, and where do we go from here? Where are we headed?
Yeah, I would say that, first of all, good afternoon, and thanks for having me on the show. So looking at the benchmark indices, first I'll speak about Nifty. We are seeing a clear-cut consolidation from a short-term perspective that is on the daily charts, because that shows that some of the technical indicators, they had been overbought, and also some of the technical indicators were in the overheated territory. And what we've been seeing is that higher levels were being sold into. We also did see at times short build-up happening, and also what we see is that however the intermediate term trend, the long-term trend continues to remain strong and positive, despite the correction that we witnessed recently. The markets have resilience, and the markets are strongly supported. So if I look at the crucial zone of support earlier around 21,400, that's a zone of 21,400, 500. That's an immediate zone of support for Nifty. If that's taken out, then 21,300, that's a level to watch out for. Short-term trend definitely is a cause of concern for the benchmark indices, specifically if I look at Nifty. Even if I look at Bank Nifty is also what is happening in Bank Nifty is that Bank Nifty has corrected and Bank Nifty has taken support. So from that perspective, it has got very strong support around the 45,400, 45,500 zone, because on the weekly charts also it has touched those levels. So that tells me that we could be in for consolidation, or we could witness some range trading in the benchmark indices. The crucial level to watch out for is 21,400 on Nifty and 45,400 on Bank Nifty. Bank Nifty, the levels which the Bank Nifty has recently, the low that Bank Nifty has made this week, they should not be breached. If we see a breach of that, then we could see some significant further correction in the indices.
Okay, well, that's your view on the benchmarks, at least from a technical standpoint, but we slip into a short break. But on the other side, we talk a lot more in terms of stocks. Stay tuned in.
Welcome back. You're watching India Market Close here on NDTV Profit. Quite a few stocks buzzing in trade, largely on the back of volumes as well. But, Anushi is here with that entire list of volume buzzers. Anushi, take it away.
Right, so I'll start off with SIS Limited, which is buzzing with about 22 times its volumes compared to the 30-day average, and the stock being about 19% up. This is back on the news floor that the company is the official security provider for the Ram Mandir in Ayodhya. So that is for SIS Limited. Now moving on to CEAT Limited, the company has seen about a 16% uptick in its stock price today, as the company mentioned that it is now foraying into the steel radial tires for its two-wheelers. Now next is RITES. RITES Limited declared a major order for IIT Bhubaneswar, so has signed a MOU over there. With this, the company's stock price again surged about 19%, with its volumes buzzing about 9 times its 30-day average. Then Hindustan Food is also there in the buzz. Not much of a stock impact here compared to the other four, like seen about a 5% gain. The companies, if we look at the 1-year return, the company has a somber return of about 4% downside return in 1 year. And last on the list is the banking stock IDBI Bank, which is on the back of strong results. The company's share prices rose about 9% today with its volumes about 6.7 times its 30-day average. So these are the stocks buzzing in volume for today's.
Right. Thank you so much for that, Anushi. I also want to flag off JK Cement because that stock is up around 2% odd. Q3 numbers out for the company. You can see that spike that you can see on the graph. Revenue has gone up by around 21% year over year. EBITDA is also higher by quite a bit. It's at 625 crore versus the 250 crore number same time last year. So almost 150 odd % higher versus last year. You're looking at margins which have come in at 21.3% versus 10 odd % same time last year. So almost 10+% on the margin front as well, and that's driving profitability higher. 283 crore is where that PAT number has come in at versus the 37 crore number same time last year. But it continues to be an earnings heavy week. That's been the focus. We had two big ones this week, HDFC, Reliance, the biggest of the lot, and now we have ICICI. Numbers expected to be out any time. And let's try and break down what the expectations are from ICICI. So I'm going to try and pull that out. So ICICI expected, your profit is expected just below the 10,000 crore number versus the 8,300 odd crore number same time last year. You're expecting net interest income to be around that 18,000 crore mark versus the 16,465 crore number. So your margins will largely be protected. Not much decline where the margins are concerned. They'll stay above that 4% number. Of course, you will see some amount of contraction, but nothing significant is what our expectation seems to indicate. Your gross NPA ratio stood at 2.48% on 30th September, expected to be flat. Net NPA 2 expected to be largely flat. What's going to be important is the growth number here. You're expecting, or you've seen good growth coming in from Kotak Agam, and it'll be interesting to see where ICICI puts its growth number at. HDFC also has been quite good in terms of its growth number, 5% sequential on the balance sheet size that it has. So it'll be interesting to see where ICICI piles up. It's been largely in the late teens where growth is concerned over the last couple of quarters. So we've seen good growth coming in even from ICICI.
Sure. What's really interesting is if you just peg ICICI Bank and Axis Bank together over the course of the last 1 year, you see an ever slight outperformance from Axis Bank. Of course, ICICI on the other hand, while it has advanced, it hasn't moved in tandem with Axis Bank, whereas the expectations were largely similar, if not the same. But that's something that we continue to keep an eye on. In any case, there you have it. That's your view. Those are returns for ICICI Bank and Axis Bank. As you can see, Axis Bank has a little bit of an edge as compared to ICICI. If we can actually pull this up and talk to Avinash about ICICI Bank as well, and I know we've had a pretty lengthy conversation around banks, but perhaps it could be the last bank that we can in fact address with Avinash. Avinash, your view on this one, ICICI Bank, and how are you placed on this?
No, I think, Agam, as far as ICICI Bank is concerned, I think their margins would continue to be protected because they have a large exposure on the retail side, on the SME book side. And I think most of the subsidiaries, if you leave alone ICICI Pru, I think most of their other subsidiaries have also done well. So I believe on a consolidated entity, profitability should be good. I would be observing, what is the deposit growth rate number, because that is going to be a key element. And I think overall, what is the management commentary on the growth outlook, on the loan book growth, for the coming, year? And most importantly, what is the kind of fee-based activity which they are planning to, do? So I think all said and done, I don't expect any major negative surprise. Provisions, I think, would also be a number where I would like to observe, because after HDFC Bank, Kotak Bank also reported a large spike in its provision number. So I think I'll like to look at the provision number, the growth outlook in terms of the disbursements, the deposits, and obviously, in terms of the new kind of any scope for any margin kind of improvement. I think that would be key data points possibly which would like to know once the company does its con call and the management shares its commentary for the coming year.
Okay, well, that's the word on ICICI Bank. But let's talk about two other stocks which are in focus. We have Anushi once again with us, and this time she's going to apprise us of the updates with respect to NBCC. Anushi.
Right. So now NBCC, if you look at it, it's about 18% up today. But what I want to focus in NBCC is not only just today, it saw about a 10% upside even yesterday. So there was a large deal where about 0.14% equity did change hands. But I want to shift your focus to the order wins that the company has been posting in this past month itself. So we see about a 5 to 6 order wins that cumulatively adds about 694 crore of orders just in this month. Now, if you look at the consolidated order book, that stood about 55,300 crore as of the October ending, and it has secured about new orders worth rupees 7,000 crore in again the October period. So just onto the historical financial like the order trends over the years, the company's order book did stand about 60,000 crore in FY21, which then came down in the range of 46 to 45,000 in the next 2 years, while the order inflows remained at about 3,300 crores. So now if we compare the order inflows over here, that has almost doubled down in the October period to about 7,000 crores now, while the book-to-bill ratio is about 8.8 times in the FY21 period. That came down to about 5.2 in the FY23 period. So now again, if we annualize the revenue of the current year, that gives us the same book-to-bill ratio that was there earlier, which is in the range of 8.8 to 8.9x for FY24. So that shows about quite some strong revenue visibility on that front. And even if you look at the revenue CAGR growth of the company, that has been about 13% in the period between FY21 to 23, and the EPS growth has been about 10% in the 21 to 23 period. The stock has also seen about a 147% surge in just this 1 year itself. So that is on NBCC.
Sure, Anushi, but stay on and also talk to us about HFCL. I believe this one is on a large order win.
Right. So again, HFCL's focus is also on the order win. The stock did see about a more than 12% upside today. This was after it received a purchase order worth rupees 623 crore for supplying 5G telecom networking equipment, which is to be executed within the December 24 end. Now, apart from that, there was another big order win for the company in the Jan month, which was about 1,100 crores of order win from BSNL to be executed in an 18-month time frame. Again, the order book status for the company stood at about 7,000 crore as of the Q2 FY24 end. Apart from the order status, the company had also raised about 350 odd crores through a QIP route, wherein it aimed to fund its capex requirements to expand its optical fiber capacity and to repay its short-term borrowings going forward. Again, onto the stock performance of the company has seen about a 58% upside in the course of 1 year. So these are the two stocks.
Sure. Understood, Anushi. Thank you for that. Now, before I focus in on some of these infra stocks, Agam, I want to quickly take Amar's view. And Amar, if you may, you've had the likes of an HDFC Bank disclose numbers, Kotak also disclose, and ICICI expected to. How are these three looking on charts? Because, you had a weak set from HDFC, a good set from Kotak in my view, and ICICI is still expected. So how should one look at some of these frontline banks at the moment on charts?
Yeah, first I'll talk about Kotak Mahindra Bank. So what we are seeing in Kotak is that it's a complete consolidation from a long-term perspective. So the stock isn't really going anywhere. It would be more of a range play because if I look at the monthly charts or even if I look at the quarterly charts, they really don't show any, I would say, indication that there is going to be a significant trend change in the near future. So Kotak is more of a range play, and what we see is that the stock has got very strong support base around the 1700 zone, 1750. So it's a good stock for a trading perspective. So 1700, 1750 is a very strong zone of support. 1900, 1950 is a very strong zone of resistance. So ideally, one can trade in the stock keeping these levels in mind, 1700 and 1900. Talking about the other stock, HDFC Bank. See, what we are seeing in HDFC Bank, again, HDFC Bank on the long-term charts, I've spoken for quite long that it's not going anywhere. It's clearly a lack of a trend on the long-term charts. And the stock did rally because if we go back and see, so in the first week of November, the stock was around 1470. From there, it rallied almost towards 1700 plus. And then again, it has corrected post the results. So what we see is that again, it's approaching the levels of this 1450. So 1450, 1460 is an immediate zone of support. But the way the stock has cracked and looking at the structure of the charts, both from a short-term perspective, from a long-term perspective, I would say the stock is in for consolidation. Ideally, it should not breach the 1450. If that's breached, then the stock has the potential to correct towards the 1400 levels. And this again is a stock, I would say, not going anywhere in a hurry. Talking about the third stock, ICICI Bank. ICICI has got a slightly different structure as compared to HDFC Bank. It's positive on the intermediate term trend. Long-term trend also is positive, though we are seeing some consolidation. But again, for ICICI, I would just give two levels. On the upside, 1040, 1050, that is it. If there is any major rally to happen in ICICI, it has to trade above that levels, which is not, we are not seeing right now that happening on the charts. As far as on the downside around 950. 950, 960, that's a zone of support. So all these frontline banking stocks from the private space, they are more of a consolidation which is happening. There's no trend per se. ICICI Bank, however, looks better as compared to the rest of the two.
Sure, that's quite a comprehensive piece. Thank you so much for that, Amar. But it's time to slip into a very short break. We are probably half an hour away from close. Stay tuned. We'll get you the top buy today, sell tomorrow ideas on the other side, along with the FNOQs. So stay tuned to NDTV Profit.
Welcome back to India Markets Close. It's a thin day of trade when it comes to volumes, but there's plenty of buzz. Let's start by taking a look at what's happening in the futures and options space, how the session of Saturday has turned out, and while the Nifty has declined by around 0.3%, we are looking at a 2.2% increase in open interest. What currently looks like fresh short positions. That's only an interpretation. We very well could see the Nifty head up on Monday. Monday is a trading holiday. Do remember that. It is going to be a truncated beat. And Tuesday, of course, is when we return to markets. But for now, we are continuing to keep an eye on the mark of 21,600 as far as the Nifty is concerned. The Nifty futures as well. To talk about the Bank Nifty futures, that's where unwinding continues. This time, the underlying is advancing by 0.7, but open interest for the futures, for the Jan futures, has declined by another 7.5% as we speak. How are options panning out right now, and where are we seeing most amount of activity? Let's pull up the options open interest bar chart as well, and that's your overall distribution. As I have been suggesting, on the lower end, we continue to see 21,500, 21,400 as where we have seen a lot more accumulation as far as puts go. On the higher end, of course, while 22,000 remains a mark which is going to be very tough to move beyond. For now, we're also seeing a bout of resistance around 21,700, 21,800. Speaking of where we have in fact seen most amount of activity, it is essentially 21,300, 21,400 puts where the most amount of action has been. That said, we're seeing equal amount of distribution, even though in small quantities when it comes to calls ranging all the way from 21,400 through and through to 21,800, 21,900. But that is inconsequential because the overall open interest change numbers aren't significant. As far as open interest gainers go in the stock future space, we do have shorts building up in GNFC, Gujarat Gas, along with JK Cement, and Balkrishna Industries and Coal India, on the other hand, looking at fresh longs. Coal India is up around 4% at the moment, so keep an eye on that one as well. Longs with a 7.5% increase in open interest. And on the other hand, open interest losers, we do have about a short covering in RBL Bank, L&T Tech, and Emphasis, and longs unwinding in Oracle Financial Services. No surprises there after the kind of staggering move that we've seen in that particular account over the previous 3 days. And BHEL is the other one, which has also been strong of late, mind you, but we are seeing a bout of profit taking there as well, and indicated by longs unwinding with a 4.5% decline in open interest. All in all, a quiet day, Hersh, but plenty to keep an eye on as far as earnings go.
Absolutely, Agam. And we'll have to keep our eye out on those numbers coming through thick and fast now. IREDA's numbers also were out, and I'm going to quickly give you a breakdown on that because the stock is up and away in trade. Some of these renewable energy financing counters have done particularly well, Agam, and IREDA is one of them. IPO price was, 30 rupees a piece, and it's currently trading at 150
rupees, yeah.
So it's a 5-bagger right there in a couple of months. But onto the numbers itself, 39% year-over-year net interest income growth. And that's largely driven by a 33.5% growth in AUM on a year-on-year basis. The AUM has now gone up to that 50,600 odd crore number. Also, when I'm looking at provisioning, it's down, and it's down largely because there was a reversal, or rather it's up, but it's up largely because there was a reversal in Q2 FY24 of 17 crore. Currently, provisioning stands at roughly 37 crore. When I'm looking at it year over year, which may be the better metric to look at it, it's largely quite decent because 50 crore was the number a year or so back, and of course the book was far smaller at that point of time. The profit after tax has come in at 336 crore, which is a 67% growth year over year. Of course, the fundraise meant that there was an equity dilution, so the better way to look at that is EPS. Your EPS has gone up by 57% as well, which is quite impressive. Asset quality continues to remain robust. If we have Avinash, let's, have a quick take with regard to some of these renewable energy counters, especially PSU driven. Avinash, what do you make of something like an IREDA? It's moved up fairly quickly in terms of valuations. Would you venture as to how do you view it? Just give us your thinking of this. REC, PFC, IRFC on railways, of course, and IREDA, some of these financiers.
No, I think, first of all, talking about IREDA results, I think very impressive numbers. Almost a 50% growth in profit and a strong 66% growth in the bottom line in this quarter. Now the AUM is around 50,000 crores. And I think, within the renewable energy space, IREDA has a niche of its own. And I think if they can maintain this run rate, I would not be surprised that even from the current level, despite being up by almost 5 times, from the IPO price, there could be significant amount of re-rating here. The key question is now going forward for its growth journey ahead. How would the company be raising, funds? Because obviously, they had a lot of ammunition earlier, but now the markets would possibly like to know in their first ever conference call and the management commentary that for future growth, how is the company faced as far as funding is concerned. But nevertheless, this business is definitely scalable. I would not be surprised that over the next 12 to 18 months, we could see strong earnings growth numbers, and that could actually re-rate the stock significantly further. Now, talking about REC and PFC, which are power distribution companies, I think there's a huge amount of latent opportunity which has got to be covered. And these are the largest player in this space. So obviously, any dips here can be used as an opportunity to accumulate. The entire, power sector pack includes power generation, power transmission. I would believe that investors should definitely look at, frontline companies within this sector. The mood is definitely very strong, and I think the coming budget is going to be another sentimental booster where power generation is going to be given a significant amount of investment opportunity. So I think definitely, I think this is a space which investors should not miss out.
Okay. Well, let's pull up the tire sector. I want to talk about Balkrishna Industries, Apollo Tyres, as well as Seat Limited. Now, all of them have risen substantially. In fact, even a fundamentally challenged company like Balkrishna Industries, which has seen a lot of weakness on account of global, subdued cues coming through, we're still seeing that sort of break out from its range that we've seen of late. Speaking of breaking out of a range, Seat is the other one which has in fact moved substantially higher in today's day of trade, moving well over levels that we've seen last in July. And same for Apollo Tyres. In fact, we are seeing good gains coming in there as well. Let's pull this up and talk about this with Amar. Amar, your view on any of these three counters, if you would offer one, and if there is in fact still a fresh long opportunity in any of these three.
Yeah, as you rightly said that we are seeing a very strong bullish momentum in the tire stocks, be it Apollo Tyres or Seat Tyres or Balakrishna. What we are seeing here is that more or less all these charts, all these stocks have similar patterns on the charts, because if I'm looking at Apollo Tyres from a long-term perspective, intermediate-term perspective, short-term perspective, also there is a very strong structure and the bullish momentum is there to stay. And also what you're seeing is that there has been significant times where the volume as well as the delivery quantity has been increasing for the stock. So that bodes well for these stocks. Talking about Balakrishna, Balakrishna was consolidating. It was earlier unable to breach the 2700 levels. It has breached that level. Technically, it is strong on the charts, but we'll have to see that it stays above the 2750 mark. Then we could witness a stock rallying towards the 2850 levels. And lastly, to talk about Seat. So if I look at Seat, Seat is one stock which has really, I would say, delivered strong returns today itself, and it has broken out of a major consolidation zone. So somewhere around 2700, 2750. So it has breached that level and sustained over that level. So again, we'll have to we'll have actually what happens is whenever a stock breaches important resistance levels on heavy volumes, we'll have to see whether the high of the day is breached or not. So that's something we should wait for rather than get into the stocks. But yes, on any correction, these are tire stocks are definitely one should look at from an investing perspective.
Thanks for that, Amar. Avinash, if I can go to you on some of these tire stocks, they've done fairly well. You know, it's an underrated story. It's not much spoken about. You know, you had the likes of a Seat going at rough. Okay, I've just been told that the Kotak Mahindra management is addressing Q3 numbers. We need to cut across to that media conference that they're having. Let's go right there.
The volatility that we have seen over the last 4 or 5 years is unprecedented. Globally, we've had, you know, COVID led to very, very significant injections of liquidity in virtually every country in the world, which obviously led to very high inflations, only last seen in the 1980s. Last seen in the 1980s. And then, of course, the central banks had to do dramatic tightening, and interest rates reached levels last seen in 2008, 2009. All of this, as if all of this was not enough to create enough volatility, we also have very, very difficult geopolitical circumstances going on as we speak. Within this backdrop, India actually has been relatively protected and resilient, with strong economic growth, improved business optimism, continued rise in public expenditure, and a pickup in private sector capex. Now, all of this is not new news to you, but I think the one thing which really stands out for me is the way India has built out its digital stack. That has transformed the country in more ways than one, and frankly is more than meets the common eye. This continues to be a very significant opportunity and change agent for everyone, including us at Kotak. In this kind of context and backdrop, Kotak occupies a very special space. Kotak is a very strong brand, has a very strong reputation. It is very well capitalized and an incredible platform offering the full array of financial services, products, and services. As I see it, the challenge and the story from here on is how we scale. Scale, not just for the size of sake, but scale for relevance. Anyway, that is just 3 weeks into the role. Today, we are all here together to look at the third quarter numbers. And with that, may I request Jaimin to take us through the numbers. I look forward to interacting with all of you on a far more regular basis going forward.
Thank you, Ashok, for your remarks. Jaimin, may I request you to take us through the numbers?
Thanks, Rohit, and thanks, Ashok. The board cleared the quarter 3 results for FY24 earlier today. Let me take you through the bank's standalone numbers first. We closed this quarter with a post-tax profit of 3,005 crores, which compares with 2,792 in the same period last year. This quarter, we had two difficult hits in the bank standalone. The first one is we took 190 crores of hit on account of provisioning towards the AIF investments. This is in line with the RBI circular, which came out in December last year. The second one was on account of trading in book, where we have a fixed income book, net of OIS. We took a hit of 168 crores in this quarter. This is where a strategy where we lock in spreads through swaps, and we do go through volatility in the interim periods, but there is a locked-in spread over the life of the asset. Last quarter, if one notices, we had a profit of 150 crores. This time we have a negative 168. So that has swung the tide in this quarter. On an overall basis, we've seen the NII at 6,554 crores this quarter, which is about 16% higher than what we did in the same period last year. The net interest margin at 5.22, which is same as what we clocked the previous quarter. Our fees and services at 2,144 crores is about 27% higher than what we did in the same period last year. the distribution income, as well as the other general banking fees, contributing both about 27% each. On the overall expenses, we finished the quarter with total cost of 4,284 crores, which is about 14% higher than what we did in the same period last year. This quarter, we had heightened costs on promotional spends in the festive season, both Diwali and Christmas. The employer cost also had a tad hit on account of increased retirement benefits and stock-related cost. On the overall pre-provisioning profit, therefore, we closed at 4,566 crores, about 18.5% higher than what we did in the previous period. Our GNPA numbers currently at 1.73 compared to 1.90 a year ago, with an overall GNPA of 6,302 crores. Our net number now at 0.34 as against 0.43 a year ago. Provisioning coverage, therefore, at over 80%. SMA2 again contained at 210 crores, which is outstanding for people who are 60-day overdue with exposure of over 5 crores. On overall advances, we closed this period with a book of 3,72,000 crores, which is about 19% higher than a year ago and about 4.3% higher than what was there a quarter ago. We also do credit substitutes, and if I add total customer assets, which is advances plus credit substitutes, at just over 4 lakh crores, we are 17% higher than what we were a year ago and 5% increment over the previous quarter, which is not an annualized number. Our sweep deposits, on overall deposits, we have seen the growth with CASA continuing to be healthy at 47.7%. The active money, which we had introduced sometime in May, June this year, continuing to grow, and that contributes another 10% of our overall deposits. The active money has seen a growth of about 13% on a sequential basis. At the bank standalone level, we continue to have healthy capital ratios, 21.2% overall capital with CET1 itself of 20.2%. With ROA for this quarter at 2.2. And if I look at the YTD 9-month number, it will come to about 2.48%. At the consolidated level, we closed this quarter at a post-tax profit of 4,265 crores, roughly about 7% higher than what we did 3,995 crores a year ago. Again, taking the hit from what I went through for the bank. The other key contributors to the consolidated profits being Kotak Securities at 306 crores compared to what they did 241 crores in this quarter. Interestingly, Kotak Securities has seen its overall market share go up from about 5.8% last year to 10.3% in this period. Kotak Prime brought in 239 crores of post-tax profit on the back of increase in the loan book. The car finance book itself has grown by about 30% on a year-on-year basis. Kotak Investments, again on the back of a rising advances book, has brought in a profit of 157 crores compared to what it did 86 crores in the previous year. The mutual fund, domestic mutual fund business bringing in 146 crores compared to 150 crores in the previous year. Last year in this quarter, we did have some capital gains benefit. The life insurance company bringing in 140 crores, which has got hit by a variety of things this quarter. One is, of course, the change in commission payments, which it has been paying as per the new regulations now. There's also an increased strain on account of non-par products which were introduced. BSS, which is our business correspondent in the market microfinance area, clocking 104 crores of overall profit after tax. The assets under management, which we do across the group, is now at over 5 lakh crores, 5.33 lakh crores overall, with 31.6% growth over year-on-year basis. This has seen growth in every area: domestic mutual fund, offshore funds, alternate assets, and in every single space. At the group level, again, the capital adequacy being very strong. We now have a ROA at the group of 2.46 for the quarter and 2.59 if I take a YTD basis.
All right, so that's the management of Kotak Mahindra Bank telling us about how the quarter's gone through and also giving us some more details with respect to the results. But we have about less than 4 minutes left for close. I'm going to quickly toss over to Amar for his buy today, sell tomorrow ideas if he has any. Amar?
Yeah, there's one stock one can definitely look at, and not only I would say buy today, sell tomorrow, one can really hold this stock as well, and that's IDBI Bank. Because if you look at IDBI Bank on the charts, this is one stock which has again broken out of consolidation. And we are seeing some very strong momentum because the stock earlier was unable to breach the 70, 72 levels. On the long-term charts also, the stock has taken out key zone of resistance. And if I go back, so the next level of resistance is somewhere around the 88, 90 levels. So that's a level where the stock has a potential to rally towards from a short-term perspective.
Well, thanks for that, Amar. And Avinash, a closing word from you here on how do you expect the upcoming week to be in terms of keeping in mind all the expectations that we have with respect to earnings coming through?
I think markets would be entirely stock specific, Agam. I think we are looking forward for large, flows of earnings coming week. And I think, the market would be entirely data driven. I would be looking at stock specific opportunities. Like today, we are going to have ICICI Bank numbers. So probably, you'll see a reaction on in the coming week for ICICI Bank. But I think all said and done, I think large, corporates from capital goods, automotive, auto components, real estate. I think these are expected in the coming weeks. So I think we'll wait and watch, but I think markets are definitely going to be on an uptrend. The Monday event, which is the Ayodhya Mandir event, is going to be very important. And after that, I think the market sentiment would obviously be significantly re-rated. So I think after that, it would be business as usual. I think more data points which come out from companies' quarterly numbers, would obviously, drive the market. I think more than the index, investors should keep a watch on a stock specifically.
Okay. Well, thank you both, Avinash and Amar, for joining us and taking us through your views in the markets and, of course, giving us an idea about how we can deal with several stocks and sectors. But very quickly, before we just have a minute left for markets to end, and I'm going to quickly recap as to what's really gone down. As you can see, we are looking at the Nifty marginally in the red at the moment. And among the gainers, we do have strength in Coal India, which is up around 4.2%. That's followed by Adani Ports, up 3.3%, and Kotak Mahindra Bank is doing well today. We have an advance of around 2.6%, in fact leading the private sector space in today's day of trade. Adani Enterprises, that's also up and about, keeping the benchmarks in terms of advances. Of course, if we can very quickly bring up the heat map and take a look at how things are panning out there in terms of losers. Of course, Hindustan Unilever is one of those counters which is weighing on sentiment. But besides that, we also have weakness in TCS, Wipro and HCL Technologies, which is also leading to some amount of pressure as far as the benchmarks are concerned overall. Hersh, is there anything else that you're spotting here?
Yeah, I mean, let's pull up the likes of a Union Bank, the likes of an Ireda, all of which are buzzing on the back of those numbers that they've come out with. We also have the likes of a Fortis. Let's quickly check as to where that one has closed, because quite a bit of movement on that through the day as well. You have likes of HFCL, so not too bad on Fortis, 0.6% lower. RITES, HFCL, NHPC, Rico Auto, if you can have all of those, those were some of the big buzzers in trade today. On the back of earnings, you had the likes of a Suntech, which was also trading lower almost through the day. Tejas Networks also trading roughly 5% lower the last time I had checked. There you go, around 6% down. But it's been a long week, Agam, and markets have closed largely flat, so not much to complain about this Saturday evening. Yeah. Hope you have a good weekend. It's a long one now.
Yes.
And I'll see you on Tuesday. We'll see you guys on Tuesday as well. For now, it's a wrap on India Market Close from all of us here at NDTV Profit.